In your experience of 165 investments, 3-4 things you look at in a founder.
You have to be 100 times smarter than me in that space to convince me that you are the right person.
How can a founder be investment ready?
They have to be mentally prepared to be meeting 100 investors and then finding one anchor investor.
You're on the board of ixigo, Indiamart and Zest Money. Founders, like what traits would you see in them early stage founders can kind of adopt today?
Play the long game. Wealth creation long game se hi hota hai.
Today's guest at the ACLR8 podcast is Rajesh Sawhney. Rajesh is one of India's most iconic angel investors with 165 investments over the last 15 years. There are 3 things that you will learn from today's episode. Number 1, the trends and opportunities for young founders as we become a $10 trillion economy over the next few years. Number 2, how can young founders raise money from some of India's best investors? And number 3, how to think long term about company building to create wealth for yourself, your employees and your investors. This podcast is brought to you in collaboration with IILM. IILM has over 3 decades of experience in fostering young careers across management, law, engineering, design and so many more fields. They have beautiful lush green campuses that encourage conversation, dialogue and learnings amongst young students. So we really hope you enjoy the podcast today and it inspires you to kickstart your entrepreneurship journey.
We didn't have a unicorn 15 years back. Now we have 125, 150 unicorns.
Correct.
And more coming. So last 15 years have been just incredible, right?
And have you been consistently investing over that 15 years? Like if you can talk to us a little bit about your portfolio, right? Like कौन से sectors में invest किया, कितनी companies में invest किया हर साल? Like generally आप कितना ticket size देखते हो? And if you're comfortable sharing, like what have been the kind of returns you've seen?
Yeah. So 2010 to 12, I just flirted with it. Learning the ropes, and at that point of time my idea was to figure out what this animal is. Also when you get into your 40s, you are a little nervous about life and you think you should learn from youngsters. That was my primary objective. Not
intellectual simulation.
Yes, staying in touch with startups and staying in touch with innovation, learning. And I had rationalized, I'll put 1 CR at work, 5 to 10 startups, and if I make wealth, it's okay. If I don't make, it's okay.
So you don't lose sleep over that money?
Not at all. Till date, I don't lose sleep over any investments I make. But there's a method to the madness that has evolved. But seriously, between 2012 to 2019, pre-COVID, is one cohort of investments where I analyzed, I did about 65 investments.
Over a period of 7 years?
7 to 8 years.
9, 10 per year?
Yeah, thereabout. And I was consistent regularly, but largely at that point of time, we were running accelerator once a year. We used to do 6 to 10 investments every cohort once a year. And that's how I largely did my investment, and a few investment in US and here, there. So out of that cohort, if I were to extract my learnings, almost 35, 40 failed.
Wow.
I got
that's
zero
almost a 50% like failure rate from
65%. 65% actually did not give me any return.
Interesting.
Right? The second was string of about 15 companies or so who would have given me some capital and some return back. So it's between 1 to 3x kind of.
Over a period of 8, 9 years.
Yeah, so those 10, 15 companies, some acqui-hire, some here, there. But the top 10 companies have given me return of 30%, 30x to 300x, or maybe 500x now.
Wow.
And overall, therefore, the portfolio return on that 65 became 12x. So that's the learning. In our business, the few winners that emerge return, they create the return profile, right? So I was lucky to have those 10 companies which finally created wealth for us. And good thing is I'm still, because I am a lifelong investor. So unless the company got bought or something, I stay invested. So I'm still invested in quite a few of them.
Because for you, I think it's about the relationship with the founder. It's a lifelong bond.
So it's some
learning.
Money off in some secondary, or some companies got sold, of course. So at least 5, 6 are still multiplying my wealth and they're still growing. So if I stay invested for next 5 years, maybe it will become 20x.
Crazy.
Right? But the challenge is to deal with 40 failures. And the other challenge is the 40 failures come before the successes come.
The failures come first.
So the companies, if they have to fail early, right? So first year, second year, third year, the survivors then stay.
And unka fir series A hone lagega, and that's how they'll start growing.
Yeah, there is some exit profile. So from COVID onwards, 2020 till now, I've done 60, 70, 80 more investments at the rate of 15 a year, last 5 years. So we'll know in next 5 years how they perform. If I'm lucky, I'll get 10 winners again. And so the good thing now is that because I have been in this, so there is a little bit of virtuous cycle. In the sense that you get exits frequently, and and then you keep investing, right?
So you can recycle your money in a way.
Yeah, yes, of course, and also you know how it will work out, so you don't lose sleep over some companies failing.
You've seen one journey in one cycle.
One cycle. So I'm now treating them this 5 years cohort, 75 companies, my second cohort, right? So like if I look at last 15 years, I would have invested minimum 5 in a year, maximum 15 in a year. That is the range.
Got it.
Right, but I've been at it. So it's not that a few year gap I took. I continued to.
So I think even with the good times and the bad times, consistency is one theme which kind of comes across.
Yeah, I think it's something that you get. I think you get addicted to. One. And if you have success, you get addicted to it more. So if you survive the first 5 years, then I think you have to be really moronic or stupid to not make money.
Interesting.
Right.
What have been your few winners?
There have been quite a few. WhatFix, everyone knows, it's a leading SaaS company. Quizzes is another, which is a leading edtech company. Medibuddy, everyone knows, is a leading health tech company. Slintel was sold to 6 Sense, which is a $6 billion company in US. Our first company we got exit in our first cohort was Little Eye Lab, which was sold to Facebook.
Correct.
Everyone remembers that because the first acquisition of any Indian company that happened.
Correct.
Like that, we sold many companies. We had Daily Rounds, which was a leading medical edtech company, which is last year created some crazy profits, 600 crores, was sold to M3 of Japan. So we made 30x, but founders sold prematurely, I think. So I'm investor in Third Wave Coffee. So a lot of...
Blue Smart as well?
Blue Smart, no, I'm not. I'm invested in Zypp Electric.
Okay.
Right. So, it sort of is at a stage today that it's like a addiction, right? So the idea is out of the 15, if I get 2 winners after 3, 4, 5 years, they not only they take care of all my sins, right? And then you play it forward.
Got it. I think one very interesting thing,
and the other thing is I'm very long term. I don't exit any company in a hurry, right? Chipak jata hu.
But is it like difficult to stay long term invested, like in terms of like, are there like pressures to exit when a company is doing well?
Yeah, so it happens because if a company is doing well at every stage of funding, you can exit. The investors are willing to buy, give you exit. Sometimes founders also.
And it's a low-hanging fruit of
so if you need money, then a lot of people do that. I don't do that. My intent is to keep investing in the first few rounds of the company.
Okay, so you'll double down.
The only place where in my learning, I feel you should take some money off the table is when investors are paying absurd valuation, right? Which right? And it happened in 2021, where companies were getting valued unreasonably. And then, if the company is good, you should still stay invested, but take some money off the table. Because the new investor is just getting giving you crazy valuation. So that's my thing about exits. Now we have 3 companies which are going IPO this year: Silverpush, WhatFix, and Zypp Electric. And I feel I should stay in those companies even after IPO. Right?
So you're not looking at exiting?
Not at all. I think great companies create more value for 10 years after IPO. Right? So why would you exit if you think these are companies that will continue to grow? Of course, you should take some money at critical points in the journey of the company and your own needs. But the way I think about it is that whatever liquidity I take, I put back in startups.
Got it. I think you mentioned about public markets. So I know one conversation that you'd shared. You're good friends with Madhu Kela, right? Who's one of India's most iconic public market investors. I think I remember telling us that I think when you'd come to Bombay, you guys lived together and shared a flat as well. Right, so you are at one end of spectrum a very active angel investor. He's a very active public market investor, right? So, how are the two different? And maybe in your interaction over the last 20 years with him, what have you learned from him?
No, he's a very shrewd and smart investor. Look, I was into tech ecosystem, but he spotted jewels in the SME space. So one of the first finds was Divi Labs, for example. So I think his core thesis is again that if you find companies which can grow for a very long period of time and find them early enough, and that's how you create multi-baggers, right? And then the second thing that he does well is that he takes substantial stake in that company, right?
So he'll double down on those investments.
Yeah, not only that, he'll take 10, 20, 30% stakes. So then your wealth multipliers are very, very high, right? As an angel investor, you take smaller stakes.
1%, 2%, 5%. Yeah.
So as GSF, we are between 5 to 10% in the company. So slightly different. His portfolio would not be that he'll be investing 5, 10 companies every year. He would invest 1 company or 2 company every year, but take substantial stake, right? So at any point of time, he may have 10, 15 companies. I would do 10, 15 companies every year.
Correct.
I'm not happy if I don't do that.
Correct.
So so different investors have different mindsets. So VCs typically would do between 3 to 5 companies a year.
And then have a higher stake.
Yes, so their model is similar. If I had large access to capital, then you will play like that. At where I play in pre-seed, I think my mental bandwidth, my team's capacity, my mental stimulation, that's very important. The sectors that we want to touch, feel. I feel 10, 12, 15 investment is what we can handle.
Got it.
Right? So we play to our strengths. So that's the difference. Of course, in Madhu's case, there is even greater temptation for liquidity. And that's why I respect even more. When, in public market, you are liquid all the time, right? You can exit. Slight pressure comes on the company, you exit. But great investors double down on those points of stresses in the company. If they believe in the fundamentals of the company, and I think that's where the genius lies. So at the critical point of evolution in the companies, as an investor, you double down or you take the money off the table. So a little bit different because as an angel investor, I remain in the life of the company 8 to 15 years with less liquidity, right? Whereas they have more liquidity but still stay.
Correct.
So having learned from him, now I'm following the same approach. My companies that go IPO, I'll stay invested.
I remember this one interview by Rakesh Jhunjhunwala sir, and he said during the 9/11 crisis, when markets crashed in India, right? So pehle to 1 week he did not come out of his room. He was completely sleeping and all. He almost went into depression. But then he said, "Kya mera portfolio normally is about 375 crores, and my the debt financing would be about 4 to 5%." he said at that time markets are at an all-time low, they can't go worse. So he actually took his debt percentage from 4-5% to 40% at that time, did a 150 crore debt and doubled down on his 5-6 investments, and that made him the most amount of wealth. So that's why they called the big bulls as well.
Yeah, it's like that's why great investors exist, because they understand the value at that point of time in the companies. So even today, if you look at our public markets, even though last year was a decent year, but good stocks, even companies like Zomato have fluctuated 50-70%.
Yeah.
Right?
Basically, like, I have this question for you. According to you, Zomato undervalued or overvalued?
It's neither. I think it's fairly valued. I'm making a different point. If you believe that Zomato will create wealth in 5 to 10 years, right? As a category creator of Q-commerce, or as a category creator of food delivery, and then maybe they will do more, they are getting into events business, then you would be accumulating that stock on every significant dip, right? So let's say the stock was at 300, now it's at 200.
So you buy it, yeah.
Right. But it may go to 150 also.
Yeah, correct.
So you have to, but you have to pick more stock, right? Not sell Zomato. If you believe in Zomato. If you don't believe in Zomato, then that's a different point. Then you're positional, right? So I think India will create a lot of winning companies, many in digital domains, who will list, right? And they will have long legs. They will have 10-year, 20-year legs. And I think Zomato is one of them. And there will be other companies which are in similar sort of wealth creating mode. So these companies, here you're getting chance to get into these companies. I wish I was an angel investor in Zomato, but if Zomato stock can go from 200 to 2000, I can even now get in.
Yeah.
Right?
Yeah.
So that's a different skill that you need to be a investor in stock listed company. But Madhu is the master of that.
Interesting. I think like very interesting insights. I'll move to our next section, which is also around fundraising for early stage founders, right? So मैंने एक podcast किया था with Apurv Chamaria, right, which was fundraising 101 for early stage founders, और हमें इतना request आया कि do a fundraising 201. So essentially, like, this section is that fundraising 201 for early stage founders. So I think in your experience of 165 investments, like, what are the 3-4 framework? Like, what is the framework? What are the 3-4 things you look at in a founder and a team or a business when you're investing in?
Yeah. So one is the founder himself. Everyone says that. Where are they coming from? How fit are they for the problem they're solving, right? Are they right team? Do they deeply believe in, or are they getting into this sector because it's fashionable today, right? So I think, and I think tweeted it also. I'll talk about that, but that is one concept, right? So this founder selection is critical, and that is because almost all investments I made, they pivoted after my investment. So those companies are not what they were pitched to me, right? Inevitably all. They changed within 1, 2, 3, 5 years, and they kept evolving. So then it's largely about the founder and his ability to adapt and evolve, right?
I think coming back to your tweet, I think you made a very nice tweet, which I want to call out as well. So I think you mentioned the importance of evolving, and you said Figma started as a drone company. Twitter was a podcast company. Instagram was a photo-based social network. YouTube was a dating app. Amazon was a bookstore. So all that is common between these large internet companies, also the founder's ability to consistently evolve with the market.
Absolutely. So that is absolutely critical. And also to survive and thrive. So you need both instincts, right? So for example, when the times are tough, they need to be able to be like cockroaches. But when the times are good, they should not be cockroaches. Then they should be running at full speed. So these are contrarian trends. And it's very difficult to judge that at the time of your investment, because they're mostly young people, they're learning with their experiences.
Correct.
And then they're evolving, right?
Like
And
an angel investor?
I would have, some teams have felt they're like super A, they didn't go the distance, but some people I was okay, they evolved and became very different today. So that's humbling part. I think the second part that everyone talks about, and that's a little tougher one, is your judgment of how big that market can be, right? Sometimes opportunities come to you disguised, right? I remember there's a company in our portfolio, Iki Foods, which is into aeroponics. And when he pitched to me, I sort of didn't get the sense that he was talking about a large opportunity, because at that point of time, there was this idea of hydroponics and small scale agriculture with some exotics being produced. But I said, okay, I'll visit your farm. He had built a 1 acre farm during COVID days. And it was an excuse for me to get out of Delhi also. So I drove to Kota. But when I saw what he had built, I saw that the future of Indian agriculture can change. So it was like a 1 acre farm with all that, but self-sustaining power with solar, no soil requirement, water being recycled, and genetics being applied, right? So they can, for example, engineer exact taste of English cucumber for you, exact size of the tomato, it'll always be the same. So today they are the English cucumber supplier on all quick commerce companies in NCR, right? Whenever you're eating a
English cucumber, it's
coming from their farm.
Crazy.
Right?
Yeah.
So and then he had another idea which was different from others. He says, sir, I am solving the tomato problem of India. Tomatoes can bring down the government. Price fluctuations are so much. But if I am giving consistent tomato production, the country will be peaceful. Right? So there was a larger vision.
Yeah.
So that's what I bought into. And that's what sometimes you see, sometimes evolves. Right? But you could miss hydroponics as a small market,
opportunity.
And it always happens. It happens in the case of WhatFix also. When they started, it looked like a widget on what is this? It's on website, a widget. Anyone can make it.
Where they can connect with support and all.
But they have now created a whole category of adoption, customer adoption categories, and they now work in a very sophisticated ways with Fortune 500 companies to help them navigate their customers through their digital experiences, right? And now AI is coming. So it's still again evolving with this agentic model. Yesterday you must have seen Sam Altman gave this operator example. So every time such companies face challenge, they evolve further, right? So that's the beauty of defining the market, right? So that's the second is the market. The third is when I make a judgment, I want to see what are they producing. I want to get
quality of product.
Yeah. So if for example we invested in an innerwear company, so I want to see what
the product is,
how the customers are liking it, the sense of it, or if there is a software product. So product in itself is not important, but the rigor that has gone into thinking through the product, that is more important. At the stage I come in, and numbers are least important. So yesterday a founder came and is in our academy, another founder, he wanted our help in business plans. So in his mind, the business plan was Excel sheets that he had made, right? 1 year, 2 years. I said, that is fine, but I'm not even convinced with your pitch. So the best investment will be made if what you tell me, I'm so impressed that I don't even care of what your business plan is, right? What your number plan is. Because
so like the
I
story
know
that
numbers
you kind
will
of share.
change. Your story, your vision, how you deeply thought about the problem. Are you the right person to solve the problem? Have you understood the dynamic of the market? Well, you have to be 100 times smarter than me in that space to convince me that you are the right person. And for that, you would have done all kind of research, all kind of things. And then finally, I'm trying to judge, are you faking your passion for this space or are you really passionate about it? So numbers at our stage are not very important. Numbers become important at Series A, Series B, Series C stage. So this is more as an art than science, but there are some science elements also.
Got it. So I think if I have to recap, you look at team, like founders, you look at TAM, which is the market, and then look at the quality of the product.
I don't look at TAM as founder's project. I make my own TAM in my head.
Interesting.
So हीरे की value तो jeweler को ही पता है ना, right? Sometimes even founders project what they are serving in the wrong way. So we don't see what they are building, we see what could it become, right? If put the right way. So I gave you example of the future of agriculture. Can IKI be the future of Indian agriculture? Right? That's the judgment I made in that form. In my view, it is. Right? So
interesting. And like if I were to flip this question, and like obviously you have given your framework, but how can a founder be investment ready? And especially because हमारी audience is a lot of young founders who पहली बार start कर रहे हैं, and fundraising is hard. Like even if you're building for second, third time, it will take a lot of your blood, sweat, tears, 6 months. Maybe you're consistently pitching, you're getting rejections. So before I start doing those LinkedIn connects and start reaching out to people, and like how do I be investment ready? Like what are some guidelines like you feel that a founder should have to be ready for raising money?
Yeah, so look, this is fundraising is challenging, but it's also not challenging, right? Today we have more access to capital than ever before.
Correct.
Right? But it's more competitive also. But there are large number of investors. So, and there are many different kind of investors. That's also the beauty of the market. So as I said, there are 1,000 active angel investors. There are at least 200-300 active funds, micro VC funds. There are
100 accelerators.
Accelerators hain, but well, I don't think mostly they fund very small amount. And then there are 40-50 serious VCs, right? This is the landscape of investment. So many times they struggle because they don't understand the investor's landscape well. Who to pitch itself is a good idea. Secondly, like I came yesterday, I met this founder yesterday or day before, and he was very naive. He had 15 years of experience, and he said, there's a Thai doing some event, and वहाँ पे ये 5 VCs आ रहे हैं, I'll get funding, right? So they have to be mentally prepared to be meeting 100 investors, and then finding one anchor investor, right? This is what they don't understand. Third, they are pitching to the wrong people. So day one, they think we should go and pitch to the tier 1 VC.
Correct.
Right? Even though they have no product, nothing. So that probably is not the right idea when you should actually be raising friends and family round.
Correct. Or get some angels on board who can be advocates of your business.
And a lot of time, they have wrong notion of their value, right? So either they are underconfident and they give too much value to their advisor and early investors. So I've seen people who given 30-40% of their companies for nothing, for some 10, 20, 50 lakhs. And then I have some people who are pitching at atrocious value where no one takes them seriously, right? So they're not in sync with the market, what they don't understand it. Unrealistic. So fundraising fails for many reasons, right? Largely because of the naivety of the founders, how to raise. Then the other question many times is, should I raise money when I have market traction or should I raise in an idea stage, right? So clearly most money is raised after an idea stage, but there are people who get funded even at idea stage. So हमारी market में कोई इतना hard and fast rule नहीं है, right? If you have the ability to tell your story in a convincing way.
The first 3 points that we had kind of shared.
And then I believe you are the right guy. We funded people at idea stage, but of the 10 investments that I do, would I fund all maverick ideas? No, I'll fund 1 or 2, right? But 8 or 9 will be ideas which are with some some distance the founder has gone, 6-9 months, 1 year, building some product, validating customers, building some team. For me, the biggest risk is whether these two founders have ever worked together. Can they even last 2-3 years together, right? So, wo validation bhi chahiye.
And how do you kind of do that fast? Because angel investing is all about, investing fast, right? So
I don't invest fast.
Okay.
I take my month or 2 months. In most cases, we are not fast investors. I think people, this notion of mile 15 minute mein aur kar diya, that's not my style. I want to meet them 2-3 times. I want to understand a little more deeply about how they're solving, which problem they're solving, market size. तो हमें थोड़ा time लगता है. I'm not a fast investor. I have to do 10-15 investment in a year, right? So जो fast FOMO driven mindset is not required actually in our industry.
They should be JOMO rather than FOMO.
वो FOMO तब होता है जब कई बार 21 में we saw, people will come and pitch you $10 million Web3. If you're not funding, it's closing tomorrow. So as soon as you hear that closing tomorrow, it's a red flag. Red flag. So I said, then why are you coming to me? I'm not interested. Sometimes you miss good companies in this, but I have not seen smart founders also pitching like this. Right?
They understand the value of the investor.
Yeah, they want you as much as I want you. Right? So if we miss it, मतलब क्या कर सकते हैं? I am not a fast guy.
Interesting.
Right? But we are not slow guys either. We are not guys who will ponder over deals for months and months and सोच रहे हैं. We will make a decision in a month. Right?
Interesting.
So, but एक month लगता है.
Interesting. I think एक बहुत interesting चीज़ थी. So obviously you're on the board of ixigo, Indiamart and Zest Money. So I've hosted ixigo founder Alok Bajpai on this podcast and Rajesh sir from Indiamart on this podcast. And both of them said the same thing about you. Like essentially, like you were one of the most like a sounding board for them in in any situation they might be in, right? And over the last 10 years you've been together, right? So but अगर आपको look back करना हो and ixigo, Indiamart और Zest Money के founders, like what traits would you see in them, that like early stage founders can kind of adopt today?
Look, I'll just take Indiamart and ixigo, these two good NCR-based companies. So these are, Indiamart has evolved over 25 years, right? I got to know them 12 years back. Through series of circumstances, I got on their board when they were 80 crore revenue. Now they're 20x more, 1500 crore plus revenue. And they were loss making when I joined their board, severely bleeding. To generating 500 crore plus cash flow every year.
Free cash flow.
Free cash flow, which is the second. It's the second most profitable company in the digital company in our country. After Naukri. Right. So that's amazing. So there are 2-3 things. One, while they have grown their platform at a reasonably good pace so far. They have been very good allocator of capitals, right? And secondly, they've been resilient, right? So they understand, these founders understood that it's a long-term wealth creation. Also see their cap table is also pretty good. Till date, Rajesh and Dinesh control 50+% of companies. So
now decision making is still with the founders.
Actually, it's a very board-run company. The issue is not that. Issue is when you want to build companies very fast, your cap table dilution happens fast. So unless you have $10 billion wealth creation, like in the case of Zomato and Swiggy, where founders are 5-7%, if the wealth creation is only, let's say, $200 million, and you dilute it to 200 million, then you're not created wealth for the founders.
Correct.
Right? So if you're playing the long game, cap tables are also important for the founders. Should be important, right? So that is one. Secondly, play the long game. Long game is always the most rewarding game. Short games create some excitement, some profits, But wealth creation long game से ही होता है. Even today Zomato is what 15 years old company. It's not a कल का बच्चा नहीं है.
Correct. हाँ.
Same for ixigo. It's again Alok and Rajneesh have played the long game.
Yeah, and multiple times, near-death experiences.
After listing, they are playing the long game.
Yeah.
Right? Even after listing is not कि चलो listing हो गया, खत्म हो गया.
Yeah.
So the vision again in both Indiamart and ixigo is to think next 10, 20 years. This is what I'm saying. So these kind of companies will create wealth. They may have 1 quarter, 2 quarter here, there, 1 year bad, this, that. They can make some mistakes. I'm not saying that every year will be a golden year. But if you took 10-year view, they'll create more wealth than Era Gara, Nathu Gara. Right? So that is what is differentiating these founders. Because they're playing the long game. So long game ke liye India best hai. Right? If you are in a market creating situation like Indiamart is, you're playing long game, you will create new opportunities. ixigo is in such a big TAM.
Correct.
Right? अभी तो इंडिया ने travel ही चालू नहीं किया. Right?
Yeah.
It's unlocking.
Correct.
The travel market is just about taking off in India.
Yeah.
So as India moves into our, let's say, $3,000, $4,000, $5,000 per capita, the travel boom will be unprecedented. Right? And if in that situation you are number 2, number 3, number 1 travel portal in the country, imagine
the amount of wealth
you can be 10x of what today is.
No, I think India opportunity though is like very exciting, right? And I think it's a great time for founders to be building in today as well, right? Like I think over the last 78 years, we have grown to a $3.5 trillion economy. अगर हम अभी एक modest growth rate of about 7% भी माने, then over the next 10 years, we are adding 3.5 trillion more to our economy, which means that sectors like consumer, right, like where legacy brands are going away, newer brands are coming in, people are okay paying a premium for newer brands. Sectors like service, where people are okay paying for conveniences, quick commerce, right? Sectors like experiences, like we hear Diljit, Coldplay, concerts, like selling out in minutes. And travel, right? As you mentioned, right? 40 crore people are traveling for Mahakumbh, right? Like unke flight tickets are around 25,000 rupees. So maybe India ka flight infrastructure is not that good, but it will get built up as there is more demand, right? So I think from an India opportunity, India consumption opportunity, though I think it's a great time for a founder to be building in any of these, categories.
No, absolutely. I think last 10 years, as I said, last 15 years were very exciting. Next 15 years will be even more exciting. That's why I'm investing. I think you are absolutely right. Even if we grow, our potential, actual real potential with reforms and good execution is 8 to 9%. Even with whatever we're doing, right, 6 to 7% is the base case, right, in my point of view. And even in that base case, you're creating, doubling India.
Correct.
But if you perform to best case, you will be tripling it. Both are possible. China has done it. It's not that we cannot do it. I think the inflection will happen. So in such a market, it's hard to be not optimistic. Right? You have to be really cynical person to be. And if you're that cynical, you shouldn't be a founder.
Or an investor.
Either, right? So then be happy, do whatever you want to do. Be a philosopher, right? So I think the opportunity is unprecedented. It's like we are a plane which is just about taking off. Runway पे है, थोड़ा भागना चालू किया है. So अभी काफी कहानी बाकी है, right? But the nature of opportunities will change. Companies cannot remain static. Competition will be 10x more. New wealth creation, the amazing thing about wealth creation is newer players create more wealth, right? Aged, old people get re-rated, right? So unless good companies keep evolving, right? This is the power of good companies. Not so good companies, even if they are in a very strong position, fritter it away. So, for example, if you take example of Zomato, it started as a restaurant listing company, menu card. Simple idea. From there, if they had not reacted to Swiggy's move in delivery, they would have got wiped out. Irrelevant.
Yeah, and today also, like with the launch of District and all,
they were second in delivery after Swiggy, second, third, fourth. And when Swiggy was doing full delivery, they were still giving option for restaurants to deliver for a year or two. I remember that because I was running a cloud kitchen company. But they changed that. Again, I think they understood game was again changing, food deliveries plateauing, quick commerce is emerging, right? So every point, the CEO of Zomato made good decisions, right? Hats off to him. Even though had some disagreement with him in public about not so being green, but you have to appreciate that and for large companies to pivot and adopt new models so quickly is not easy, right? The momentum sets in, type of people, status quo kind of arrangement comes, right? But this is the power of digital platforms where you can do new things, right? Alok Bajpayee's case, if he had remained static to airline travel, this is how they started, super app of airlines. But the bigger opportunity came in trains.
And then buses.
Then buses. So it's evolving. Now hotels, now holiday. So platform plays are create most wealth. Platform, you build a platform, then you can create more products on that platform, right? So that's why I believe in platform companies.
Interesting. And I think just on a side note, like I know that you're founder of a company called Inner Chef, right? Which is a food delivery brand, multiple brands you had under Inner Chef. And I think one USP of Inner Chef was that you used to deliver healthy and fresh food fast, right? So, and obviously like I think you exited that business some time back. But do you think that if today was the right time, right place, to be running Inner Chef, and in today's environment when there is quick commerce for food, right? If there is and people are talking about India being unhealthy and obese, and quick commerce for healthy food hota, then Inner Chef could have been one of the larger players.
Yeah, see that the issue is the 2-3 different issues. It's I think in the food delivery, the most value has been created by the delivery companies, not by the creating companies, right? It's very clear. That's why restaurants keep complaining, and that's why we don't have many unicorns or kind of wealth Zomato, Swiggy have created, or any even Rebel Food is nowhere near that, right? So value shifted.
But we're seeing that evolution, right? Like with Cure Foods and as well now.
I have a question mark. I think in this business, the customer relationship is with the
platform and not the brand.
The brands have got commoditized, right? So unless you're really building a very compelling brand experience, you are very, very replaceable. That was one learning why I exited that business. So value is in the platforms, not in the product, right? Even if you see, even Domino's, such a big brand, has got weakened over a period of time. At least in India, right? Unless you control your own direct customer interface, this is the challenge with platforms like Zomato and Swiggy. They can commoditize brands. The two other points. The point is, which is an important point. Sometimes ideas are ahead of time, right? Hota hai. The perfectness is like it happened in the Zepto's case. They were right time at the right place, right? Dunzo was ahead of time, right? You get what I'm trying to say?
Correct.
Zomato had the muscle to be, once they saw it taking off, they bought Blinkit.
Correct.
Or they bought Grofer and renamed Blinkit. But Grofer had struggled for 8-10 years, right?
Actually, if we look at it, Dunzo and Blinkit Grofer started at the same time. Zomato acquired Grofers, and Reliance, I think, acquired Dunzo. And one of them died and one of them thrived.
So that's what I'm trying to say, that you could be ahead of time, you can become spent force and not be there. So there are 3 cases that I've Dunzo, Grofer,
and Zepto
found a new life under Reliance, and Zepto got incepted at that point of time. right? So the timing is very important in our business. Sometimes if you are not on time, then you need resilience and ability to adapt, right? I gave you the Zomato example. Now the third issue you raised is about Indian food habits. So Indian food habits are very dramatically evolving, right? Health is an overhyped concept, in my view, in Indian large market. It's becoming significant, but still not a big enough concept.
So it's a niche concept still.
It still is a niche concept. I think you look at the growth of Haldiram. Haldiram is not a health brand. But look at the growth of Haldiram as a brand. Other big trend in India was the QSR, right? Which is getting built out at a very massive scale. And now the third trend is coffee shops.
Correct.
So I invested in Third Wave Coffee when there were 4 or 5 stores. And then the COVID came, they became 2 stores. And now there are 150 stores,
crazy.
Right, in last 4 or 5 years. And their vision is to go to 300 stores next year. Same for many other brands. I think Starbucks is now at 400 odd stores. They want to go to 1,000 stores in the next 2 years. So that's a big mega trend, right? Is health there? It is getting there, but still not inflecting. But what is inflecting right now is, I think, QSR, coffee stores, and definitely people like Haldiram.
Interesting.
Right? It's their time. And the other learning I have is that while Western food habits have come to India, and it's still our own food which is driving the major consumption, right? The biryanis, the dosas, the chola bhaturas, right? The sweet shops, modernized, glitzified, they've innovated on their product. Now you're getting healthy sweets. All of that is happening. But what I'm trying to say is the health concept again has to be found within Indianness. Health is not necessarily vegan in India. So you have to find health within our millets, and what is healthy has to be discovered within Indian food taste. If you try to create food habits dramatically because it's healthy, people don't change. It's a very small market. So there are opportunities. It's a very exciting space. So if I have to capture the food, I think platforms have the bigger power. Brands are tough. There will be many brands. Haldiram is, for me, the story of the decade on the brand side. And then I think the emergence of coffee shops.
And QSR.
So QSR, coffee shops may, if you see Third Wave and Blue Tokai are breaking out, right? These are the big ones. But we don't find a health food brand in the same scale, right? I think it's the next 5 years we'll see. Not as yet.
Interesting. And like 2024, I think you also mentioned that was the year of IPOs, right? Like we had 268 IPOs, 90 on the main board, 170, I think 178 on the SME IPO, right? So like abhi, like what are some sectors or companies that you feel would be doing IPOs in 2025?
Many. I think there are about, on the digital side itself, there are 25 to 50 possible IPOs. I shared 3 companies in my portfolio which are getting IPO ready for next 12, 18 months. WhatFix, Akash is doing Zypp, and Silverpush, Hitesh. So 3 I'm familiar with. And there are many, many more. I'm familiar with some of them, like Off Business, Infra Market. They're all doing pre-IPO rounds. So there are many exciting companies which will come this year, and I think it's very good. We should move from 25 to 100 listed companies in the digital tech domain in the next 2-3 years. And over 10 years, the digital tech companies will become, I think, as valuable as the finance companies and financial services companies.
NBFCs.
Yeah, Bajaj Finance or banks. So largest market cap is today of the financial companies,
correct.
right? But look how it changed in the US. Oil companies to finance companies to tech companies.
Interesting, yeah.
I don't think we have the tech prowess of the type of platforms that US created, from Apple to Nvidia. But we still have enough platforms. So these platforms may not surpass financial services in India, but become comparable.
Interesting.
It will be the second biggest wealth creator in the size. But the largest wealth creator on stock market will be digital tech companies, without doubt. Right? And many of them will be decacorns, and maybe a few could be $100 billion companies. So it's not inconceivable to think that one of these companies, Policy Bazaar to Zomato, will cross 50 billion market cap in a few years. Right? Or some of them may even cross 100 billion. Or maybe there's a company which is not even born will get there. Right? So I think this reflects the maturity of the ecosystem when 100 companies are listed and every year 10, 15, 20 companies are listing. So that's the advantage of NASDAQ, where this kind of dynamic evolution of listed companies is there. And it's good for the capital. Capital rotates, right? When investors, 23 was a very bad year for funding. 24, when the stock market listed started happening, you've seen
there
now
the liquidity,
and
the cycle is coming back.
Cycle is coming back. So this cycle is very important to be always in motion. If there are choke points in the cycle, then it breaks.
Interesting. I think another interesting thing obviously is, on the AI front, right? Like, I think last week एक announcement हुआ था, like with the US government of Stargate project, right? With SoftBank, OpenAI, Microsoft and Oracle investing along with the US government investing $500 billion in GPU compute, right? And I think again you had tweeted, and like obviously there was a plan of the Indian government as well. They would, I think, buy 100,000 NVIDIA GPUs and give it as digital public goods to the startups to kind of build products on. But do you think, with this AI trend and like so much investment in the US, India is under-indexed on AI and we are missing out on this next movement of wealth creation and opportunity to build?
Totally. I think while India has done well on the digital tech platform, we have not created our own cloud platforms, our own now LLM platforms. So because of two reasons. One, we have remained open to the Western products, right? Whereas China ring-fenced itself and allowed its domestic companies to build those competencies and scale. And they've done it. The cloud is private, it's Chinese in China. Twitter of China is Chinese thing. The Google of China is different. For us, Google,
even hardware also, like Huawei, like Apple of China is Huawei.
Apple still sells, but with restrictions. But Twitter is not allowed. So look, given our political situation and integration with the West, that is not likely to happen. But we still need to provide a robust enough platform for our domestic companies to build world scale, at least compete at world scale, right? And I was hoping when the announcement was made last year that 10,000 crore will be put out there to put GPU layer, I was hoping it will move fast. The challenge of India tends to be that we're not that fast, it's still talking. The scale at which things are moving in AI is mind-boggling, right? And there is a risk of getting left behind. Right? We cannot just leave it to private capital. Like UPI spurred a certain innovation on the financial side. I think on the AI side, if they had created this layer of infrastructure even for IITs and top 100 engineering colleges,
research-based colleges,
so then it unlocks creativity and ability of talent to work on it. So hopefully it'll change.
Interesting. And I think you mentioned China as well. So obviously there's this whole debate of India and China, right? And essentially like made in India and manufacture in India. So like, do you think there are certain sectors now like where India can outpace China and outgrow and compete with China in the next few years?
No,
Maybe auto, like you were at the Bharat Mobility as well.
I think there is no equivalence, no competition or no equivalence between China and India.
Okay.
They are world's second largest economy. We are nowhere near, right? I was yesterday reading number of automobiles sold in China
25 times. Like that auto market in China is almost 30 times as compared to India.
25 to 30 times.
Yeah.
So the scale at which they're operating, building has become very different. We have to pick our battles, right? And this large equivalence between India versus China, we should be realistic. And we just in manufacturing also, we should pick our battles. We cannot compete with them on every front. But there are some areas where we need to create world scale economies. So hopefully, Apple's coming to India to manufacture in India has created a momentum towards electronics manufacturing in India, right? But it's still nowhere compared to what is happening in China, right? We are still maybe 1/10 of that in scale and production. So I think it's still a long way to go. But China is a different beast now, right? We are in a different trajectory.
Interesting. And so I think we talked about multiple sectors. We looked at consumer, food, quick service, manufacturing, auto. Like another sector, I think where you have invested a lot is Spacetech and deep tech, right? I think.
Actually, I've not done any.
Actually, you've not. I thought you'd done Agnikul PB.
No, I'm not. I'm not an investor in Spacetech and deep tech, but we have spent last 6 months to understand this space.
Do you think India can have an India space station, like there's an international space station?
India will have, without doubt. I think it's so. There are. So I think the time of deep tech has come now. Right? Some funds and some companies have created they've done good work in last 5-10 years. It's come to a stage where people can come in, and now these companies will move faster. And capital will also come into these companies faster. I think it's the inflection point of deep tech in India, and which is a very good development. Funds like Invest Special have done an excellent job. It's not been easy, but I think now is the time of India. As far as the space tech is concerned, I think ISRO has been an exceptional organization, right, of research and innovation. But it's no longer enough, right?
India needs its own SpaceX.
Yeah, so SpaceX has proven, like I was reading yesterday that ISRO will do 100th launch. And then I looked at how many SpaceX has done. I just on the web, I went to their website. They've done 457 launches in the last 5 years. So they have totally changed the paradigm of what is going to happen in the space.
And also brought down the cost.
Space is not enough now, right? We need badly participation of Indian talent and Indian entrepreneurs if we want to be competing with US and China in space. Otherwise, it's game over. So I think Government of India is cognizant of it. That's why they're encouraging ISRO to open and work with startups. Good work is happening. I'm very, very hopeful that you'll see at least 10, 15 deep tech unicorns in the next few years.
Amazing.
Very good work is happening.
Amazing. No, I think thank you for sharing those insights. I think we'll move to the last section. एक चीज़ मैंने podcast starting में बोली थी कि I think you have a very diverse opinion on a lot of topics, right? So like we'll try to get your opinion on some topics which are non-startup and not non-entrepreneurship. And I know that you'll have very contrarian views. So renting versus buying a house.
First house you should buy. After that, it makes no economic sense.
Why?
It's always, you see, if you are investing, you'll always make more money in stocks than on real estate. It's proven, right? So if you want to make real estate your business, then by all means buy 20 properties, but be into that, right? But if you're thinking of you are doing some work and you are putting your assets to work, then stock market or even startup investing will far outperform than your real estate investment.
So the only reason to buy a house then becomes social security.
Yeah, more than that, it's the pride. It's the you feel good, you feel secure to be in your house. Otherwise, there's no logic, right?
Interesting.
So I of course say that if you want to buy for your own living, invest in one house. But there's no point investing in 10 houses as an asset class.
Got it.
As an asset class, it can never outperform what you can get from investing in companies, private or public.
Interesting.
That's my view.
Top 3 cities to live in India. I know you travel a lot, so.
So I will not talk about Delhi, Bombay, Bangalore. They each has its own issues. I think three cities that have impressed me is one is Coimbatore.
Oh, interesting.
I think in South Coimbatore, people talk about Mysore, but I have never been to Mysore, so I don't know. But I would pick up Coimbatore, right, in South. Then I'll pick up in North, depending on who you are. I think Chandigarh, Mohali is a very good setup. Quality of life is good.
Proximity to Delhi NCR as well.
Yeah, all of that, and you live modern life, you have access to hills, is relatively...
AQI is relatively better.
So these two, and third for me is always Goa, right? I just am in love with Goa.
And a lot of now large companies are also shifting their bases to Goa. Delivery did.
But it's not become a movement. Those were exceptions. No large tech company. It's not like every year 5 are moving. Because Goa doesn't have that business feel to it. And I think it's okay. So it's a unique place in India with its own cultural and diversity and its vibe. So for me, these three: Coimbatore, Goa, and
Chandigarh. Mohali. Interesting. IITs versus Ivy League colleges for an 18-year-old.
Both are good. Ivy League, my children went to those, so I think they offer a little more broader evolution of your personality, right? The way they are structured. So I think you become better communicator. Also, you can pursue many different ideas. With IT, hardcode you to certain disciplines. But IITs, the track record of talent from IITs is unparalleled. So also not everyone can afford Ivy Leagues. So IITs have their own unique place in the world, and it will always remain. Definitely. They've done a great job.
Gambhir versus Dravid as India's coach.
Dravid any day.
Dravid any day.
I'm fan.
Interesting. And do you think Gambhir can now turn around the what happened in the Indo-Australia Test series, and India can come back to the top of the rankings again?
I think the whole India will of course come back. And the cricket is so deep rooted Indian. So I think the whole team. I think they say end of an era, right?
With Rohit and Virat as well.
And many others. So I think we need to reimagine our teams, especially for cricket, Test cricket. Our 2020 team is very good. The challenge with one-day cricket is it's neither falling here nor here. So it's that format is stuck in between, right? But I think technically 2020 people are more suited. If 2020 team was sent for one day, I would have been happier. Right, rather than a test team adapted to one day. Right, test requires a very different
mentality,
caliber, attitude, and it's remarkable that this format has survived.
And thriving now.
I think it will survive. I think we had a temporary setback in Australia, but it is I think old system, old people, the greats have to retire gracefully. So we should give them send off now.
Got it. Can singularity be achieved? And if yes, when?
Very soon. It's there, knocking on the door. It's faster than we think. See, in the time frame of mankind's evolution, this is huge. This is bigger than invention of fire or wheel or electricity. I think what has been set in motion in last 10 years, it is upon us, right? It's a real issue. Humanity will have to deal with and learn to work with it.
And singularity essentially is that there's one AI or AGI machine which is intelligent, more intelligent than all humans combined, right? So like you feel that
in most cases they are already more intelligent than us.
But on day-to-day tasks as well, on everyday life, right? Like they have that emotional intelligence as well.
Yeah, they will get there. They're getting there with each model, each iteration. You see how much iteration already has happened towards that. Every month something is happening. I have never seen something like this. This kind of fast evolution of technology, in a very fundamental sense of way, these models are changing the way we even have started to think about computer science. Right? So it's going to happen very, very soon, sooner than we think.
Interesting. Pickleball, serious sport or fad?
I think it's here to stay. It's not a fad. It's not a serious sport, but it's serving the need of the economy, the humanity. It is well-to-do people, but it's like played by youngsters also. Older people can also play. It's a very comfortable play. Like ping pong, it's the next evolution of ping pong, right? It's a little more strenuous than ping pong, but not as strenuous as tennis.
Yeah.
It's less resource requiring. So it's perfectly positioned for adoption and popularity. I don't think it's fad. I think it's a very good sport for people to remain active. Even couples can play it against a good couple. So it's an invention of the modern time. So I think every condominium in Gurgaon will have a pickleball. Yeah, I think so.
Interesting. Will TikTok...
It'll be adopted very fast.
Got it. Will TikTok be sold to Elon Musk?
Yes. If not to him, to some other American guy.
But it will be like...
That's why they've given 90-day extension to cut a deal. But it's a part... Look, for Chinese, it's a set piece on the chessboard with China, with America. They don't give a much about TikTok. For them, there are other things at play. So they will sacrifice TikTok very easily. So that's the thing. So I think TikTok will move to American hands, I think.
How would you rank India's last 5 prime ministers?
Who were they?
So obviously Modi ji, Manmohan Singh, Atal Bihari Vajpayee, and then I.K. Gujral and Devi Gowda.
Less said about I.K. Gujral and Devi Gowda, better, right? They worked in a coalition, weaker sort of setup. I really admired Vajpayee as a leader, as a man of stature, principles, erudition. You know, he was a sophisticated person. Manmohan Singh ji did a great job. He changed the fortune of our country with Narasimha Rao. I think that team was the dream team that if ever India needed, that team delivered. So Manmohan Singh worked in a different set of circumstances, but he delivered. Despite all the constraints and whatever of the coalition government and not having a political base the way Modi ji has, the strong political base, he delivered for Indian economy, right? And he kept it tight. Modi ji has a historic opportunity to take India to leapfrog. So some good things were done. For example, I think this whole UPI thing.
Digital public goods.
So well, every prime minister has a different challenge. I am hoping this 5 years he will put us on a higher growth path.
Yeah.
Last 10 years, if I would to see the economic growth is at par with Manmohan Singh ji. Data. I'm not talking about it. I think it's made Indians feel prouder about themselves. But data-wise, same performance. This 5 years he should outperform, right? This is the time of his peak, right? I'm hoping he'll deliver it to us.
Interesting. And one last parting advice to early stage founders who are looking at building the next big business from India.
Yeah, so I think keep innovating. There is no one path to fundraising. Be flexible. Find product market fit earlier without burning a lot of money. And believe in India opportunity. I think despite all our problems, it's still one of the most exciting markets in the world, right? If I were to build digital businesses, China is a different case, but I think there are only two places I would build: India or America, right? In my head, there's no other
large digital economy.
Either you be building there. American advantage has been that you can build large-scale global companies. India, again, you can build large-scale companies, but for India. But you can also now build from India some global companies. That I think time is coming. So go for it.
Amazing. Thank you so much, sir. I know that, I think I really appreciate your time, first of all. And, I know that I've been bothering you for a long time for this, so really valued your insights.
Yeah, and I hope you got something.
No, for sure. And I think one thing for the audience as well. So I started my angel investing career. You mentioned about evangelism, right? And you said that there was somebody who kind of told you about angel investing, and that's how you got into it. So for me, evangelism happened through Rajesh sir, right? And I joined your GSS Super Angels program, and that's how I learned about investing.
That's what we're trying to do in that program. So every cohort we bring some people who are at a tip of investing, right? So they need a little bit of nudge, little bit of encouragement. And I'm very happy that many of the 100 that we have brought into this field in last 1 year are investing now. I'm just playing it forward.
Amazing. Thank you so much, sir, and we wish you the best in your investing and building journey.
Thank you.
Thank you.